Hello guys, thank you very much for joining me. This is Roy Machungura. Welcome back to Pip Valley, where we're going to carry on with the second segment of the day. So we're going to be looking at the Usdzar pair, preparing for the likely movements for the upcoming week. So we're going to be looking at the weekly and the daily time frame. If you want to watch the monthly analysis that we did on the monthly time frame, just click on the link above where we'll be directed to the video with the monthly analysis. So without wasting much of your time, let's get straight into our analysis. This week we are not going to put in the structures that are supporting the bearish. Why? Because I'm now expecting a reversal, right? There is now more evidence for a reversal. You can notice that since the price made this touch, it made the second touch on this support zone 14.39096, right? And after this double top, the price went on and formed a higher high and then pulled back, and now it has formed a higher low. And to make things interesting, this higher low now had a gap. The price gapped up, right? Which means that it opened higher at a higher price than it had closed the previous week. This is also a sign that the bullish pressure at this zone is significant. So we'll be expecting that since there is that double bottom, and after the double bottom the price went on and formed a higher low, we'll be expecting that there's now bullish presence, and this bullish presence is going to push the price to the upside. So we'll be expecting that having formed this higher low, the price is going to break above 15.62851, maybe pull back to retest it, and then continue movement to the upside. So this is the first scenario. The second scenario that I'm expecting is that since we cannot control the market and since we cannot predict the market, what we'll now be expecting is that a possible bearish scenario will be that the price is going to pull back from this, right, and form a lower high. Then, and from after long a lower high, we're not going to trade from this lower high. Why? Because the price is just coming from a higher high. So we're expecting that the price is going to break below 14.39096, pull back, and upon pulling back, if it forms a lower high, that's when we'll be open a short position, maybe up to 13.56593. Why 56593? Because of that triangle that formed, right, that descending triangle that formed, and its height being up to here. So from there, saying it will get here. So these are the movements that I'm expecting on the weekly chart, and mind you, I'm expecting the bullish positions to have a higher probability than the bearish positions. Now we move on to the daily chart. Generally, I'm still expecting bullish movement to dominate, or to have a higher probability on this pair. So what we'll be expecting is that remember, we have that gap that we saw on the weekly chart. So this is this gap is represented by these two lines that I've drawn. So basically it's this zone that's representing the gap, right? So with that in mind, what we have noticed now is that the price formed a gap, and upon forming that gap, it went on to form a higher low, and upon forming this higher low, the price then went and formed a higher high. So what we'll be expecting is that since the price has formed a higher high, the price is going to pull back, right? And upon pulling back, this zone is going to act as a support zone. As we stated that if a gap forms, it forms a support and resistance zone, right? So this gap we'll be expecting it to hold as a support zone, and if the price closes anywhere above this low, which is maybe 14.74954, forming a higher low, and also meaning that this zone has held as a support zone, we'll be expecting to take long position. And that long position, because we're expecting a strong movement, and also because we had this double bottom, and now we have a higher low above this double bottom, we're expecting this move to be strong. Since we're expecting this move to be strong, we would like to believe that the price may break above this consolidation zone, pull back, retesting this zone as a support zone, and then move all the way to the upside, right? But so this trade is a high risk, high reward trade. If things goes our way, you can potentially make 1 to 10 risk ratio, reward ratio, or more than 1 to 5 to 1 reward to risk ratio. But it's very risky. We can expect also the price to continue the bearish movement where is the bearish movement now coming from? It's now coming from the previous analysis that we made in the previous videos. So we noticed that in those videos we had bearish structures that were still prevailing, and the bearish structure that we even covered in this on the weekly time frame, where we had a descending triangle. So the price may come from a lower low, right, breaking below 14.57117, right, then pull back and form a higher high, and this now may also now act as a resistance zone. And if the price closes within or below this zone, then the price may then move to the downside, retest this zone, and move up to 13.56593. So these are the movements that I'll be expecting on the daily chart, and also overall as a pair. I'm expecting that the bullish, the reversal pattern will be more prevalent, and we have a higher probability than maybe the continuation of the bearish trend that we have been experiencing for the past couple of months. Given the gap and the double bottom that we have, and the fact that also the price formed a higher low on both time frames, on both the weekly time frame and the daily time frame, I have a stronger conviction for the bullish. So we can notice that we also now have learned on both time frames, we have learned about the breakouts, right? We have also learned about the gaps, right? So this is actually the way that I trade gaps, right? I treat them as support and resistance zone. Once I see a gap, it's now a support and resistance zone, and depending on where it is. So I know that there are exhaustion gaps also, like where a gap might form at the end of a trend, but in the direction of that trend, it's signaling that maybe the bullish pressure is now coming to an end. And there are also gaps that form at the start of a trend, like this one. I think this is a gap that is formed at the beginning of a trend that is signaling that it's no longer consolidation, it's now a breakout. So it's always a pleasure having you guys. Thank you very much, guys, for joining me. You have a great weekend. Manage your risk well, grind the markets with grit. Roy Machingura out.